Good evening.
Good evening.
Can you enable content share for me so that I'll load the PPT and check it out?
Okay, I'll just ask Sandeep, can you please allow content loading, sharing, Mr. Vaitheeswaran?
Download and desktop.
Sir, namaskar.
Namaskar, namaskar. Open it.
Hi, JK.
You're on mute, sir.
Yeah, I am unmuted, sir. I am unmuted. Morning. Good afternoon, Vaidhi, sir.
Good afternoon, Krishnan.
Afternoon, sir.
Good
Yes.
afternoon, sir.
Good afternoon. Yeah, I can see the screen.
Yeah, we can
Yes.
see now.
Fantastic. Krishnan looks like an amazing person with a new hairdo.
True.
What hair?
See, he has lost it artificially.
It's a lot of hot air, nothing else.
Ask Vani or Shanmu who is coming. Oh, the horrible throat. Everywhere it's going around Chennai.
The new thing going around Mumbai is conjunctivitis. Everybody's getting conjunctivitis.
Oh my God.
You get out of one and you get into another. It just goes on crazy.
But in Delhi it's viral going on, Everybody's down with fever and bad throat and sneezing and everything.
Bad throat, H1, influenza, they call it different names.
Yeah.
Keshav bhai,
Yes, sir.
Keshav bhai, somebody be able to be here throughout, so you please take over, moderate it and do it.
I'm sorry, I missed that. Sorry.
Do it on behalf of ACAAI.
Can everybody hear Samir bhai? Am I getting?
Oh, Samir, your voice is breaking, Samir. Your voice is not clear.
Keshav is saying that he may have to drop out sometime and he wants you to take over at that point.
Who has to
No,
drop?
I want Keshav bhai to do the whole thing.
Oh,
Sorry, I didn't.
Please tell him that. Please tell him that.
Keshav, he wants you to do the whole thing.
Sorry, the whole
Whole program.
the whole presentation. But that
No,
you right?
He has some issues, I guess.
No, I
He's
want
asking you to be
Keshav bhai-
moderator.
moderate the whole thing.
ठीक है, no problem. Okay.
But Samir, your microphone has got some issues. You may have to probably reconnect.
I will. Actually, I'm not in the office. I
Oh,
will do
that's why.
that.
Now we can hear you, Samir bhai. Now it's clear.
Yeah, I will be able to be here throughout. So you please take over and do it on behalf of ACAAI.
Yeah, that's not a problem. But just to let you know that we can hear you now, no problem. And I have not read this presentation, so I mean.
So it's okay. You don't need to read it.
Fine.
You don't need to read it. He's going to do
Vaitheeswaran
it.
has
So
to give the
just,
presentation. We just have to introduce Vaidhi. We have to moderate that. Basically, he's the one who has to advise us on all these issues of the new GST, which is coming up. And that's what we have requested to Vaitheeswaran to do that, That's why he's here with us. So he has to give the presentation.
No problem. I will do that. No issue.
So I think, shall we start or what?
I would suggest we wait another 5-10 minutes because we had around 260 registrations an hour back. Normally we expect about 20% of the persons not to log in. We are at around 160. I think we wait another 5-7 minutes. We'll be at about 180 or something when we can start.
Yeah, just ensure that the
next appointment.
microphone of all other participants are switched off.
No, only the people whom you see on the screen are panelists. All the rest will not disturb you either by audio or video.
Fantastic.
But then how do we take their questions?
No, that time they can come in.
That time my office will open it up. You just say, okay, Sandeep, please open it up for so-and-so person. So he will open it up for that person to speak.
Whom do I request that?
Sandeep.
All right. And,
You can
and
let me know. I'll get it organized, not a worry.
how will I know who
Yeah.
wants, how will I know who wants to?
They'll put up
You
their
have
hand.
a panel. You have a panel of participants. If you look at your strip, there is something called participants.
It's showing me 102
If
attendees, but I have
yes,
got okay.
I've got 162. I've got 162 just now.
Okay.
So 152 participants and 10 of us. So when you look at this 152, if you will click on detailed attendee list, you will be able to see people having raised their hands and things like that.
Okay. All right.
Did you get it?
I guess already 3 people have raised their hands as I see it. So 4.
Yeah.
now.
So this, exactly. So you have to just say, open up this person. They will open it up for audio for the person.
Got it.
And you are already getting question answers in the Q&A box.
Yeah.
And Govil sir is also there. He's also fully adapted this. So between the two of you, I don't think there should be a problem.
Vaithi, are you able to see the question answer box or not?
Yeah, 2 of them have come.
Right. So maybe you can just have a quick
Yeah, I'll look at it.
Start, so, yeah.
Whatever, Keshav bhai, whatever you can see, Vaithi sir can see.
Great.
And the same thing, all these people, Mr. Krishnan, Vipinji, Afzal bhai, Praveen, Sunil Arora, and Govil sir can see.
Got it.
Last count was 292 registrations. So, but I think in another 5 minutes we can start.
Yeah, I have just received, sorry, Vaithi, I have just received one meeting notice which says, please refer to your representation regarding extension of GST exemption on export freight. In this regard, you are requested to please make it convenient to attend meeting covered by Vivek Jory, Chairman CBIC on the said issue. The time and avenue, date and time 13:10, venue room 153. So at 11:30, it has already gone and I've just received the mail now.
No. Goraji, we just received another mail, which said 17th October at 11 a.m.
Okay. Okay, then it's fine.
Just that mail has come 17th October, 11 a.m. at same place.
Okay, that's fine. Because I just...
Blessy, are you there? Blessy, are you there? Blessy? I don't know whether she's there or not.
Mr. Nigam must be there, Abdul Bhai.
He was there.
I don't know, because see, if Blessy has got the notice of, she has got the letter, she could screen it. That's why I was calling Blessy. She could, share there on the screen, but I don't know whether she's there or not.
That's okay. But 17, there is 17.
Okay. I think now we should start, Abdul Bhai, if you allow, we should start now.
Mr. Sivaselam is also there, I believe. Yes, he's there. He has sent in a question. Welcome, Mr. Sivaselam.
I think we should start the meeting now because it's almost 3 o'clock now.
Yeah.
Good afternoon, everybody. You all know what is the situation today. We are into big trouble of GST, which is being imposed on air freight and sea freight. So how to tackle it and how we have to do the documentation, what is the consequences, how we have to go about it. for that, we have requested Mr. Vaitheeswaran, who is very expert in this, and we all know Mr. Vaitheeswaran, so we don't have to give any introduction of Mr. Vaitheeswaran. So I would suggest, Mr. Vaitheeswaran, if you can take it over from here. And if anybody wants to make any question after Mr. Vaitheeswaran finishes his round of talks, you can raise a hand, and the host will be allowing you to ask the question, or you can please put the question on the chat box, where if it is possible, that time permits, we will give the answer today, or we will, I think we'll request Mr. Vaitheeswaran, we'll send the questions to him, and if he can, send the answers, we will be sending it to that particular gentleman. Thank you very much. I think, sir, it is over to you, sir.
Thank you, Afzal Bhai, and good evening to all. It's a pleasure to meet with the MC members as well as the other members and associates of ACAAI. And ACAAI is well known to me for many years, right from the early days of service tax regime. I've had some role to play with ACAAI and their deliberations. This is a new one that's come from 1st October. Without much ado, I'll go straight into the presentation. That's one. Yeah. So Airfreight export and sea freight export were taxed in GST from 1st July 2017. And this was a major regime change from service tax. And the industry struggled, the freight forwarders struggled, and there were a lot of issues. And there were various rounds of representations. ACAAI played a stellar role. We had rounds of meetings with the finance ministry as well as the representatives from the GST council. There was a specific logistics committee in the GST council, transport committee, which gave us a fair hearing. And after various rounds of discussions, they saw merit in the claim and issued notification number 2/18, which amended the exemption notification, and entry 19A and 19B specifically exempted transportation of goods by aircraft and transportation of goods by vessel, where the goods are moving to a place outside India. And they were matching SGST notification, matching IGST notifications. And it had a clause which said that this would expire by 39/2018. And every year, without fail, there was an extension. 39/19, 39/20, 39/21, and 39/22 was supposed to be an extension, but unfortunately, the extension notification did not come. Normally, this should have happened in routine, but did not happen. And as a consequence, from 1st October, the exemption is no longer applicable, which has its own implications. So I'm not going to do any fancy explanation as to why GST has come, what is the logic of GST, what is the philosophy of GST, and all those things, because all of you are well aware because you dealt with GST for a couple of months. But I'm going to go into certain new things which have come from 2018, which has an impact. So let's look at sea freight. This is a relevant entry, transport of goods in a vessel, and the CGST rate is 2.5 and matching SGST rate is 2.5. Therefore, sea freight attracts what we call as a 5% GST. But there is a condition. The condition is that input tax credit on goods other than vessels, including bulk carriers and tankers, used in supplying the service should not be taken. So for a typical shipping line, they cannot take credit on goods other than the vessel, ship, bulk carrier, etc. They can take credit on input services, there is no problem, and they will charge 5% GST. So when a shipping line charges 5% GST and that invoice comes to a freight forwarder, it comes as a service invoice. So it comes as a service invoice, and therefore for a freight forwarder, it is an input service. And therefore, being an input service, the freight forwarder is in a position to take the credit. And when the freight forwarder charges 5% on the exporters, then the other person, the exporter, can avail the refund as far as this is concerned. As far as air freight is concerned, there is no specific entry for air freight. There is only a general entry called goods transport services other than the various services. And by virtue of the residual entry, there is a CGST rate of 9% and an SGST rate of 9%. Consequently, GST would be 18%. So the freight airline would charge GST at 18%. Freight forwarder has to charge 18% on the exporter in India, where the exporter is the client. And the GST charged by the airline is an input service for the freight forwarder. Now, so far, so good. Everything was hunky-dory in terms of understanding. There is a peculiar issue which is going to affect this industry big time. The law, as far as GST is concerned, the place of supply determines whether it is an IGST transaction or a CGST SGST transaction. So where a location of supplier and place of supply are in two different states, then it becomes an IGST transaction. So typically in the days of July 17 and August 17 and other months when you actually paid GST, if the airline was in Mumbai and the freight forwarder was in Mumbai, the airline would charge CGST and Maharashtra GST. If the airline was in Mumbai and the freight forwarder was in Delhi, the airline would charge IGST. So it was quite clear that both of them were in the same state, therefore CGST, SGST, both of them were in different states, therefore the IGST. In place of supply was somehow worked out. But the one particular provision which is of importance is Section 758 provides that if a supplier is located in India and the place of supply is outside India, then the supply has to be treated as an interstate supply, which means the moment the place of supply by law is outside India, the transaction takes the color of interstate supply, transaction attracts IGST. The fact that both of them are in the same state does not really matter. So the place of supply becomes a crucial point, and that is determined as per the provisions of the IGST Act. Now, this is where you need to understand why I'm saying it's a peculiar issue. Because if you look at Section 12(8) of the IGST Act, Section 12 would apply if both parties are in India. That means the freight forwarder is in India, the exporter is in India. The provision very clearly says that the place of supply of services, blah, 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 location, etc., etc. But a proviso carves out an exception. This came from 1/2/2019. Nobody really bothered about because the exemption was there. Where the transportation of goods is to a place outside India, the place of supply shall be the place of destination of such goods. So typically an export freight, air freight segment, where the destination is Germany or the destination is UK, then because of this proviso, the place of supply is outside India. So what happens? You can have one freight forwarder sitting in Delhi. He will deal with an exporter sitting in Delhi, but the place of supply is not the address of the exporter, but the place of supply is UK because the destination of the cargo is UK, and therefore this transaction becomes IGST. So now this creates a mind-boggling issue in terms of implementation and compliance. What is the issue? And the government also explained this, the council also explained this through a circular saying that if the transportation is to a place outside India, we are changing the place of supply to make it as destination. So now you're required to charge an IGST on the transaction. Even an airline is required to charge an IGST on the transaction. Now, what is the practical problem? The practical problem is airline is in Mumbai, freight forwarder is in Mumbai. The moment they key in the state code of Maharashtra, the portal would not allow charging IGST. The portal automatically calculates CGST, SGST. Whereas the law mandates that you have to charge IGST. So the airline has to charge IGST because the destination is outside India. The freight forwarder has to charge IGST because the destination is outside India. But because of the fact that both of them are in the same state, if they key in that particular state code in the portal, there will be a problem. So what is likely to happen is, because of the fact that the destination is outside India, airlines are likely to use the code for other territory. There is something called as other territory in the portal. Now this other territory, if it is used, it's called as a 097 code. The other territory is actually meant for an exclusive economic zone. It is not meant for a destination outside India, but people are living with it. And therefore my expectation is that this is the only way they can trigger an IGST billing, because otherwise the system would not allow charging IGST on this transaction. So they will put other territory as the state code and charge IGST on the transaction. So airline is likely to charge IGST at 18% and use the code 097, which is applicable to other territory. Assuming the freight forward is in Mumbai and the exporter is in Mumbai, the system would not accept IGST if you put the state code of Maharashtra, and charging of CGST and SGST would run counter to the proviso to 12(8). I'm seeing a very serious problem because many people would charge CGST, SGST thinking that both of them are in the same state. If you charge CGST and SGST in the transaction, you will be violating proviso to section 12(8). Few years later, the department will come back and say, you paid CGST, SGST, but that is wrong. You should have actually paid IGST. You pay IGST now and then ask for refund of those two. So right from beginning, must be clear that the transaction attracts IGST unless the government wants to make some changes in which way we can look at the effect of the proviso has to be addressed. So the only way IGST can be charged is to adopt 097, which is applicable to other territory, which by itself, in my view, is a compromise. Because other territory is not meant for destination outside India, but that's the only way you can charge IGST. So therefore, probably the association has to take up this issue upfront and address this issue as to how this billing has to happen. Of course, the primary claim of the association is that please restore the exemption because of other reasons, which I'll come to it a bit later. But if the exemption is not going to continue for some reason, there has to be absolute clarity in the billing format and the ITC format. Otherwise, it doesn't make sense. So let me explain export of service. First of all, for export of service, there must be a supply of service. You're all engaged in supply of services. Supplier of service is located in India. Freight forwarder is in India. The recipient of service is located outside India. Place of supply of service is outside India as per the Act, and therefore destination is outside India. Therefore, place of supply is outside India. But most critical condition is payment of service is received in convertible foreign exchange. And the parties are not mere branches of one another. If the transaction does not qualify as an export of service, then it would attract GST. So when does it qualify as an export of service in your business? I'll come with some illustrations with much more detail a bit later. Just like how we explained section 12(8) of the IGST Act, there is 13(9) of the IGST Act, which applies when you deal with a foreign party. So when do you deal with a foreign party? ABC Logistics Delhi deals with another logistics company called as 123 Singapore. Or XYZ Logistics Chennai deals with another logistics company called XY Logistics Dubai. Or 123 Logistics Mumbai deals directly with a foreign importer. So in all these freight transactions, one party is outside India. The moment one party is outside India, section 13 comes into play. The place of supply here also, there is no problem. It is destination outside India. So in the billing by ABC to Singapore, in the billing by XYZ Chennai to Dubai, in the billing by 123 Mumbai to the foreign importer, the location of the person who is receiving the service is outside India. The place of supply is outside India. Destination is outside India. You are located in India. All three conditions met. Only one more condition: receive the money in convertible foreign exchange. If you receive the money in convertible foreign exchange, it would qualify as a zero-rated supply as well as an export of service. So let me delve into a little more detail. Airline with the GST registration is in Delhi, India. ABC Logistics with GST registration, Delhi, India. Exporter is also located in Delhi, India. Typically, this would be, CGST, Delhi GST, CGST, Delhi GST. But unfortunately, because of the law, because of the provisions, the transaction between airline and ABC Logistics becomes an IGST transaction. Therefore, airline should charge IGST at 18%. Transaction between ABC Logistics and exporter is also governed by section 12 because both are in India. And therefore, this also attracts the IGST at 18%. So assuming airline sells a freight slot at 100 rupees to ABC, and ABC sells a freight slot to the exporter at 117, airline will charge IGST on 100. ITC can be availed by ABC Logistics. ABC Logistics has to charge IGST on 117 on the exporter. ITC can be availed by the exporter, and then ultimately exporter can claim refund. So the fundamental question which people are asking is, if ultimately this is going to be refunded back, and ultimately somebody is going to claim refund in the entire chain, what is the logic of taxing everybody in the chain and ultimately giving back as refund? This is one of the fundamental questions which many people have already raised in the context of the withdrawal of the exemption. So let me slightly modify it. From first gear, I'll go to second gear. So there is an airline, there's an Indian freight forwarder. And as in your business, it is quite common, you also have a counterpart in abroad. So airline sells a slot at 100 rupees to XYZ Logistics, Mumbai. Now, XYZ Logistics has got a counterpart, a friend, a partner, an associate, not necessarily a branch, somebody who you have dealt with in relationship and build some contacts. So you sell it to that person called 123 Singapore, Messrs 123 Singapore for 140. Now, 40 is your margin. Now, airline would have charged IGST at 18%. You can avail the ITC. Now, because of the fact that you have provided a service to a person located outside India, since the place of supply is outside India, since the receipt in convertible foreign exchange, your transaction would become an export of service. That means the billing by XYZ Logistics on 123 Singapore would become an export of service. If it becomes an export of service, what follows? Little more depth. Now, most common issue which people kept asking in the last 1 week, I've been getting a number of calls from some of your members on this particular transaction. PQR Limited as a shipment on FOB basis. Very clear that freight is not prepaid. Now, JK India purchases the slot, airline slot from DHL. Who has purchased it from Lufthansa? Lufthansa has charged 100 plus GST at 18%. DHL has charged 110 plus GST at 18%. JK India prepares house airway bill with charges collect and then identifies JK Germany. JK Germany issues a delivery order after collecting the freight from the German importer. JK Germany pays 130 to JK India. So JK India is the exporter of service. He has to raise an invoice for 130 on JK Germany and receive it in convertible foreign exchange. All other conditions are met. So only critical thing is required is a proper export invoice and the receipt of money in convertible foreign exchange. So even in a non-freight paid transaction like an FOB transaction where freight is collected, it is quite possible for the transaction to be an export of service. So what is this export of service? Export of service is a zero rated supply. That means the transaction is zero rated, which means your ITC is intact. This is the difference between exemption. If there is an exemption, you don't have ITC or you don't have full ITC, you have only proportionate ITC if you have taxable supplies. But if it's a zero rated supply, your ITC is intact. That's the beauty of zero rated supply. So what is required? The invoice is required to have a specific declaration. Plus, as an exporter of service, you must execute what is called as letter of undertaking. Earlier it was a bond, now it is letter of undertaking. Letter of undertaking normally is executed in the month of April and it is valid for the end of the financial year. So since it has suddenly come in October, you can now also go in and get your LUT done. In your LUT, you will estimate what is your export of service for the year. And then you will also give a commitment saying that I will receive the convertible foreign exchange within the time prescribed by RBI. If I do not receive the forex within the time prescribed by RBI, then I hereby agree that I will pay the IGST with interest, GST with interest. So this is very, very important that not only must you receive the convertible foreign exchange, you must receive within the time prescribed by Reserve Bank of India, which is also a possibility of extension if RBI extends it in your case. So it is very critical that you understand the scope of the LUT. In an LUT, you commit that you will receive the forex within the time prescribed by RBI. Once it is a zero rated supply, once you have issued an LUT, you are not going to pay any GST on your export of service. But your airline has charged IGST, your auditor has charged GST, your insurance company has charged GST. There are other so many GST which has come into your business. You have taken ITC of all those things. So there is a formula. Every month you can claim refund based on that particular formula. Basically, it is proportionate to your export. If you are significantly export, then you will get significant refund. But companies which have, let us say 40% export and 60% domestic, they will use the ITC significantly for domestic itself. And therefore, they may not even have a need for claiming refund. So it depends upon your business provider. If you're a 100% exporter, then you have to ask for a refund of the entire ITC based on that formula. This is one option. Some companies say, no, I don't want this option because this is LUT. I have to wait for the refund of the ITC. I have a lot of ITC. What do I do? Then pay IGST on your export of services. That means 18%. You pay 18% on your export of services. And then for air export, then you claim whatever you paid as refund. This is similar to your excise days of Rule 18 rebate of central excise duty. So you pay the GST on export and get back as refund, or you don't pay anything on export and claim back your refund of ITC. Both result in refund in some form because you're an exporter. Now comes a peculiar complication. Multiple parties are involved. Airline sells a slot to IATA agent at 100. Airline charges 18% IGST. Now, IATA agent sells that slot to a sub-agent 1 at 105. Sub-agent 1 sells that slot at 110 to ABC Logistics. ABC Logistics sells its slot at 120 to exporter. Nothing wrong in the supply chain. Only critical thing that is important here is everybody should be registered. Everybody should charge IGST. And ultimately the exporter can claim the refund. But for all the ITC credits that you need from the sub-agent's invoice, you have to ensure that all your sub-agents comply with the law. The GST law is no longer simple. The ITC law is absolutely far from simple. It is one of the most complicated requirements under Section 16(2). Therefore, if you want your credit to be intact, if you want your credit to be seamless, if you want to ensure that you don't suffer in the end, you may have to sit with all your sub-vendors and have some kind of discussions to ensure that they comply with the law, check whether they comply with the law, keep on monitoring whether they file their returns, keep on checking whether they've paid the tax. If they've not paid the tax, probably deal with them in a business manner in however way appropriate that you feel, not deal with them in the future, or provide for some kind of contractual consequences. If you don't do all that, you will have serious issues in your ITC, because in this business there could be multiple parties. Some of these multiple parties may not even be registered because they were all exempted, they were not even registered. So in the chain, if you want to continue this multiple party segment, you have to ensure compliance. So you have no other choice but to call for a meeting of all your sub agents and then explain to them what the law is. They're all quite new. You have to explain to them what is GST, how they have to implement, ensure that they file their appropriate returns, because otherwise your ITC could be in trouble. In a freight prepaid transaction, it's a no-brainer. There's a master bill of lading or a house bill of lading, or a master RV bill or a house RV bill in the case of air. Freight is prepaid. Airline or shipping line would charge GST on freight forwarder. Freight forwarder would charge GST on the exporter. No freight is payable at the destination, and goods can be released without the freight payment. Freight collect. All these are different versions of the same transaction, but since people are used to the terms, I'm addressing in the term wise. Whether it's a master bill of lading or house bill of lading or a master airway bill or a house airway bill, freight has not been paid at origin. Freight is expected to be paid at the destination port. It will be freight collect. You will have an agent or a foreign freight forwarder who would pay the freight to the Indian freight forwarder. So typically the Indian freight forwarder would receive money in foreign exchange, and it would be export of services, zero rated supply. Option 1, don't pay any GST, claim refund of ITC. Option 2, pay IGST or invoice value and then claim refund of the same. Now, having talked about all this, we need to understand what is the story outside India. No country taxes export freight. Singapore has got a robust GST system. They implemented GST eons ago. Singapore is clearly, very clear that export freight, including freight forwarders, are zero rated. Australia does not tax export freight. New Zealand does not tax export freight. UK does not tax export freight in terms of VAT. Why? Everybody believes that when the goods leave the country from any particular, let us say it's leaving Singapore, the freight from Singapore to the ultimate destination forms part of the value of goods when it lands there. And that is why freight is included in the customs valuation for import purposes. Whenever goods come from abroad to India, we include the freight in valuation in CIF. Well, in calculating the customs duty, you add the freight. The ocean freight or the air freight is added, and there are formulas for adding the freight if the freight is not ascertained. Therefore, freight is always construed to be a part of value of goods for the purpose of customs duty. Hence, nobody believed that it requires GST also. That is why countries have decided not to tax export freight, and they have been maintaining that for many years from inception. This was all highlighted during our last discussions in 2017, and the government fairly accepted, yes, what you're saying is valid. There's no necessity why we should bring a tax on this when no other country is taxing it, and gave an exemption route instead of a zero rated supply. A zero rated supply would have been ideal, but we got an exemption. But now from October 1st, we are imposing GST on export air freight as well as export sea freight, which has a huge cash flow impact. And there's going to be a massive compliance requirement for industry. And the tax credits are also quite complicated, which I'll explain a bit later. So let me move on to valuation. Why I move on to valuation? For the simple reason that GST is a levy on transaction value. What is the transaction value? Price paid or payable. What is the price paid or payable by me to my supplier? Your supplier is the airline. So the law is very clear. Any discount, if it is clearly identified, no problem. Before or at the time of supply, if the discount has been duly recorded in the invoice issued in respect of supply, no problem. If the discount is post-supply, then the law requires a credit note kind of a scenario, an agreement or an arrangement which clearly identifies that discount post supplies can be given subject to certain parameters being met, etc. So typically you need to have some kind of arrangement to ensure that if your discounts are happening in the invoice itself, there is no issue. But any discount which is post invoice, which comes 3 months later, 4 months later, because depending on the volume that you pick up or your relationship, etc., then that will be through a credit note. If that happens through a credit note, you have to meet the requirements of section 15 and section 34, which by itself is an ocean. You have to understand the scope of that and ensure your agreement with the airline is well structured to cover that. So since price paid or payable, we are not bothered about published tariff. In fact, this is one of the questions from many of the members calling me saying that, sir, published tariff is 200. Should I pay GST on 200? No. If the published tariff is 200, what is the price at which they sell you? 160. Transaction value is 160. GST is payable on 160. When the member sells the freight slot at say 172, transaction value for the member to the other party, the shipper or the exporter, is 172, and therefore GST is payable on 172. Now, existing patterns as far as your business is concerned is that there is a cargo sales report, which is a document having different patterns. The difference between the tariff rate at which the freight slot can be sold and the actual rate at which is given is identified by different names. Some airlines call it discount, some airlines call it incentive, some airlines call it market level adjustment, but primarily it is a discount. So what is important is you have to convince the airlines. I'm sure they would have already implemented, because July 17, they were initially the invoices were not coming. At least a couple of weeks later, invoices started coming. So a proper tax invoice from the airline is critical, which has to clearly specify the discount and then the transaction value. Now, we are not only in invoice, we are also in e-invoice. Now, what is this e-invoice? You have to go to another portal, generate a IRN, you upload all your data for the invoice, you will get an IRN number. That IRN number will be tagged along with your invoice, and the entire supply chain will know this particular IRN. It doesn't mean anything except tracking for the government, much more higher level of compliance and a more efficient system as far as invoicing is concerned. And this portal is very robust. It is not the GST portal. It is another portal. It's a separate portal. You have to go to the portal and get the IRN. So airline, obviously, because of their size and turnover, will generate e-invoice. A freight forwarder may also have to require to register, raise an e-invoice if their turnover for any of the years has crossed 10 crores. From 1st of October, it is 10 crores. Maybe January 2023, it may become lesser also. So a freight forwarder may also be in the e-invoicing regime. Airline has to specify all information in the invoice. Most important, airline has to file two critical returns, GSTR 3B and GSTR 1. IGST charge by the airline should be reflected in your GSTR 2A. You will have a portal. You have an account in the portal. When you go to the portal, if your airline files the GSTR 1 and puts your GSTN number, that IGST should come and sit in your GSTR 2A. That is the most important requirement. Once that is done, thanks to all the changes that have happened in the recent years, the government will then specify what you can take as a credit in 2B. Now, why is this 2B becomes a critical document? Today, what you can take as a credit depends upon the portal deciding that this may not be eligible because that fellow is defaulted, he has not filed returns, he has not properly availed ITC credit, therefore that GST is not valid, therefore you cannot get credit. So your 2B becomes the most critical document. So in case sub-agents are involved, you have to ensure that they obtain registration, they file GSTR 3B, they file GSTR 1, they ensure all the tax is paid, and then only you will be able to get your credit. All parties must pay GST by the due dates for you to get the credits. So invoice is mandatory. Typically, invoice will have description, value, tax, and other things, etc. I've given a format of the invoice in terms of this. Most of you are already raising these invoices, so you should know. I don't have to spend anything, except that please understand that e-invoicing is a new system that has come into the play. Tax invoice must be issued in a period of 30 days from the date of supply of service. Invoice should be prepared in duplicate, and serial number of invoice during tax period shall be furnished electronically in your GSTR 1. In case you receive advances, then you're required to issue a receipt voucher. In the receipt voucher also, you have to indicate all these things. Please understand, as far as advances are concerned, advances for goods are exempt from GST. Advances for services are taxable. Therefore, if you receive advance, you have to pay GST immediately. Now, quickly moving on to input tax credit. Now, here you have to understand that input credit means there are three boxes: the input service, and the capital goods. The definition is very wide. Input means any goods other than capital goods which are used for my business or intend to use for business. So almost all the goods will qualify unless it is blocked. Similarly, input service, almost all service will qualify for credit unless it is specifically prohibited. I'll talk about what is prohibited. Capital goods means what you capitalize. It is no longer linked with your 82, 84, etc. chapters. Capital goods means what you capitalize. So you buy a laptop, you capitalize it, then it is capital goods. So what is the effect of that? Can I take GST credit on that? Yes, you can. But if you claim depreciation in respect of, if depreciation is claimed on the tax component of the cost of capital assets and the plan under the Income Tax Act, ITC on the tax component shall not be allowed. That's all. You can take on the cost of the asset, but not on the tax component. So you decide which is better, depreciation is better or ITC is better. So from a air freight forwarder perspective, I'm very carefully putting my words, air freight forwarder perspective. What happens? You have goods, you have printing stationery, you have materials, you have items in your office, you have laptops, you have air conditioners, you have furniture, anything you can claim credit. Those all the items will qualify. Your airline bill is an input service invoice, therefore you can take credit. All your auditors' bills, insurance bills, lawyer, reverse charge, whatever you paid, you can take credit. So you are in a position to maximize your credit, provided all those fellows comply with the law, all of them file their returns, and the ITC requirements are met. But if you're a sea freight forwarder, what happens is that the 5% rate has got a catch. The 5% freight has got a catch by saying that you cannot avail ITC on goods other than tanker, ship, etc. So as a freight forwarder, you are entitled to claim credit on input services, but all your goods you cannot take. So goods is quite wide. So you cannot take anything on goods because you want that 5% rate. 5% is a concessional rate, therefore it always has got certain conditions. So nexus to business is what is required, much wider. Whatever you claim in income tax, you can claim in here also, because business expenditure, and this is almost similarly structured. What you cannot claim is also very important. A lot of people think that, sir, I have cars, I can claim credit. No, you cannot claim credit unless it is you're a car dealer. You cannot claim on your other vehicles unless you're a user of the vehicle for a particular activity. Food, beverages, outdoor catering. You're putting up a new office. What the construction you spent, you cannot. You're putting up a new warehouse. Whatever construction you spent, you cannot. So there are certain things which are by law, they say you cannot. Therefore, you cannot. Of course, as far as the construction part is concerned, there is a Orissa High Court judgment which said this provision has to be read down and you can take the credit. It's a case called Safari Retreats, and it was decided in favor of the assessee by saying that the GST philosophy itself is to ensure that ITC is fully available, and therefore this section has to be read down. The appeal against that was filed with the department, and the hearing started today in Supreme Court. We'll have to see the outcome of this decision. Beauty treatment you cannot take, cosmetic plastic surgery, club membership. You don't have to take on, nobody takes on all these things, but you just have to be alert that you don't take on all these credits. Now, this is most important. For you to avail ITC. Now, when I say for you to avail ITC, if airline is going to raise an invoice on you, to some extent, they would comply with 16(2). That means they would raise an invoice properly. They would file their GSTR 3B. They will file their GSTR 1. It's an assumption. And nothing wrong in assuming that because they're fairly big organization, they would comply. But if you're going to have 2-3 people inside the chain, and then it comes to you, then the airline might comply. The first fellow might comply. The second fellow may not comply. You would be in trouble. Therefore, it is very important that everybody should comply. So what is the requirement? I must have a tax invoice. I must receive the service. Tax must be actually paid to the account of the government. And returns must be furnished by the parties. GSTR 1, GSTR 3B, all that is done. And my portal should say, Arey Baba, don't worry, this credit you can take. Portal should not say, no, you cannot take credit. So today, the 2B becomes the most crucial element in your credit. So watching that portal, continuously ensuring that your supplier files their returns becomes some kind of an exercise. If it's large volume, you may have to engage, you have to use some software to ensure that tracking is done. So GSTR 1 has to be filed by your suppliers. So due diligence on suppliers becomes absolutely important. Sir, you may ask me, sir, what is wrong? This is nothing, why credit should be smooth, credit should be seamless. I advise different sectors, and I know for a fact that manufacturers and other service providers are struggling with vendors and job workers and contractors in terms of ITC, because some of them have cash flow issues. They've not filed the return, because you can't file the return unless you pay the tax. If you don't pay the tax, you cannot file the return. So this fellow does not have the money to pay the tax. He doesn't file the return for that month. Next month, if he wants to file a return, he has to file the previous month's return and pay the tax. 2 months it defaults, the portal will just knock him off. The system will knock him off. So you have to be very, very careful in your supplier profile. You have to do some kind of vendor analysis to ensure that your credit are very, very protected and you don't get in trouble because of your supplier. So ITC has become quite complicated compared to what was there in July 17. After explaining to you all the provisions and the special items as far as the freight forwarding business and the airline and shipping segment is concerned, I will flag myself a couple of issues and deal with each of them. First issue, rates are effective from 1st October 2022. Nobody knew, imagined that the exemption would not be extended. Everybody thought that extension would happen because every year it has been happening. So people have been providing services in September 2022. Cargo slots have been booked, cargo slots have been sold, billing has been done by the work has been done by the airline. You have done the work to the exporter. So what should I do in terms of these kind of transactions? Law has already answered this. So this is very, very crucial. Where services have been supplied before the rate change. That means you have supplied the services before 1st October 2022. Invoice has been issued and payment received after 1st October 2022. Time of supply shall be the date of receipt of payment or date of issue of invoice, whichever is earlier. Now, the problem is simple. Airline is likely to issue invoice in October. Payment is likely to be made after they issue the invoice. Therefore, airline will simply quote section 14 and charge IGST even for the services rendered in September 2022. This is very, very important. Why? Because you have to raise a matching bill on the next fellow in the chain. You have to raise an invoice on the next fellow in the chain or in the exporter or the whoever is the party involved. Now, if you issue an invoice after 1/10/2000, please read as freight forwarder. If freight forwarder issues an invoice after 1/10/2022, IGST has to be charged. Now, this is a fait accompli because September is gone. We are now in October 13th, and the change has come from 1/10/22. So this has got a huge impact as far as September transactions are concerned. When freight forwarder has issued invoice prior to 1/10, there are a lot of people who have said, let the airline raise the bill on me whenever they have to, when the billing cycle comes. But my billing cycle, the exporter already delays my payments, and therefore I'll raise the invoice quickly. And therefore there could be freight forwarders who have issued invoice prior to 1st October 22. And payment comes in October or November. Time of supply is the date of invoice, which means exemption would be applicable. Please understand this very carefully. Freight forwarder has issued invoice prior to 1/10/22. Payment comes after 1/10/22, but the time of supply is the date of invoice. Date of invoice, time of supply means your date of invoice is prior to 1/10/22 when exemption was applicable. Therefore, there is no necessity to charge GST on the exporter. Payment is received by the freight forwarder before 1/10/22. Advance, entire money has come. Invoice is issued after 1/10/22. Time of supply shall be the date of receipt of payment. Here also exemption apply. So this slide is actually a very, very friendly slide compared to the other slide. Now, another question that has been bogging a lot of members, they keep asking me this question is, sir, 5% is applicable to shipping line. Will the same apply to a freight forwarder, or should freight forwarder charge 18%? So I asked the counter question. All these years, transportation of goods by vessel was exempted through entry 19A, 19B, 19B specifically for vessel. How did you claim the exemption? So as a freight forwarder, you claim the exemption on the same entry. So transportation of goods by ship was applicable to the shipping line as well as to the freight forwarder. Similarly, 5% is applicable to the shipping line as well as to the freight forwarder. But the condition also flows along. Therefore, you cannot take any ITC on goods used for providing the service. So your shipping line's bill is not goods. Your shipping line bills is a service invoice. It's an input service. Therefore, you can claim the GST charge by the shipping line. You can claim GST on other input services. You cannot claim on the goods. 5% will apply even to a sea freight forwarding business. Sir, you have explained export of services. You also mentioned somewhere that I have to be careful in my invoicing. What is that required? My invoice should carry a legend. It should have an endorsement. So what is your endorsement? It depends on what method I follow. If I follow a method where I pay IGST on my export value, then the first declaration, supply meant for export, etc., on payment of IGST. If I go for an LUT and I don't charge GST, I have to use a second endorsement, supply meant for export, supply TCS unit, etc., without payment of IGST. This is very, very important. It has to be captured in the invoice. Invoice should also mention the name and address of the recipient, address of delivery, and the name and country of destination. Wherever e-invoicing is applicable, e-invoice should be informed GST INV, which you have to obtain an IRN, which I explained later, from a portal, where you have to upload all the information. Currently, e-invoice is mandatory from 1/10/22 for B2B supplies, where aggregate turnover exceeds rupees 10 crores in any financial year. Fourth issue, airline sells to ABC Logistics at 100 rupees. ABC Logistics sells to Messrs. 123 Singapore at $120, $120, $100, $120. But then there is an understanding. Look, I'm selling it to you at $120. There could be an arrangement where you are also entitled to some profit share. So you may have to give me 120, but I have to give you 10. Reality, end of the month or end of the year, you have to give me some money, I have to give you some money, all that is adjusted and something is paid, netting off is done. Now for export of service, $120 must be received in convertible foreign exchange. RBI permits netting off under certain circumstances. So long as you meet the board circular requirements of RBI, netting off is possible. So even this adjustment of 10 is fine. But the 10 has to be recognized as payment. So if you recognize as $10 as foreign exchange outflow or payment, then it becomes an import of service and ABC Logistics has to discharge IGST under reverse charge mechanism and avail credit. This is something new which you need to take care as far as this kind of transactions are concerned. Now I'll flag I'll address the elephant in the room. As I said, it's a compromise to use the state code 097, which deals with other territory. Because there is no way you can charge IGST unless you put 097. Unless the law is amended, there is a removal of difficulty order, keeping the provision at abeyance, or special directions are given saying that how you can, what kind of code can be used, because the portal will simply throw you out if you put the state code of Maharashtra or Delhi, if both of you are in the same state. It will charge you the local taxes, which is wrong because the proviso says is IGST. So other territory and 097, it should not end up in ITC being denied. Now, normally, when the GSTIN of the freight forwarder is shown in the GSTR1 of the airline, it will be reflected in 2A. The portal will also specify as 2B. But just in case this does not happen because of the other territory uses, because this is too new, nobody has done this other territory before. And it's a huge amount of 18%. Therefore, in case exemption is not restored, of course, there is a lot of effort going on from ACAAI to ensure that the exemption is restored. FIO has made representations, Madras Chamber has made representations, a lot of industry bodies have made representations saying that this is not the time to tax the export freight. This is just not the time to withdraw the exemption on export freight. And assuming that is listened to and the exemption is restored, fine. But if it is not restored for any reason, then there are two options. One, ITC should be seamless. This coding should not affect your ITC. And second, why should air freight be at 18%? There is no justification for 18% for air freight. If sea freight can be 5%, and because of the without ITC, maybe 12 with ITC could be an option. But that's just, I'm just thinking aloud on some of the options which the organization can take. Last but not the least, should it be taxed? As I explained earlier, internationally air freight, sea freight are not taxed. I'll leave that. But the proviso to section 12.8 says place of supply is outside India. Now we always keep saying that this is a destination-based tax, this is a consumption-based tax, GST is a consumption-based tax. If that is so, if the destination of goods makes the place of supply outside India, if the entire place of supply is outside India, is it correct to levy GST on this transaction? That's a larger question. And we recently had this national logistics policy. Beautiful policy, which talks about so many aspects of logistics and very well structured. If you read Appendix A2 of the National Logistics Policy, it says that CBIC may lay down plan for implementing smart enforcement, import clearance system, policy for promoting investment in logistic parks, supporting development of digital database system for efficient logistics, integration of NCTF, NFTFP, and addressing the issue of taxation multimodal transport. So, after announcing a national logistic policy, you cannot have a massive change like this where the logistics sector gets the worst impact of the tax as far as GST is concerned. So, primarily, the idea, the national logistic policy itself makes a case for restoration of the exemption, and international practice, international precedents also support this particular point. So this entire presentation, I've touched about the withdrawal of the exemption, I've touched about the sea freight, the air freight, the freight forwarder business model, the multiple parties business model, your ITC requirements, your compliance requirements, your invoicing requirements, your e-invoicing requirements. I've visualized some of the questions and tried to address it through issues, but if there is something else which comes up, I would be glad to attend, glad to answer those questions. I wish to thank the management committee and the president of ACAAI for calling me once again to share some of my thoughts as far as this business is concerned and this tax issue is concerned. And thank you once again for a very, very patient hearing. Floor is open, and the moderator, the committee can decide how the question answers can be addressed.
Thank you, Mr. Vaitheeswaran. This is Keshav here, and I'll be moderating the session. I think there are some questions on your screen, sir. Perhaps if you could have a look at those and we could put those behind us, then maybe we could move ahead.
Yes, the first question has come from Mr. Sai Krishna, which is one of the issues which I've floated. The invoice will come with the other category, other territory, and like 97. So would there be any kind of issues? Because ICAAI has given a practical FAQ which says that it is a controversial subject on ITC, etc. Which I agree, because there can be an issue on ITC unless it is adequately addressed. If it comes in your 2A and 2B, there should not be any problem. But nothing wrong that in case the exemption restoration fails, the ITC must be much more seamless, and the billing pattern of IGST must be adequately addressed.
Thank you. If we could go to the next one.
Yeah, the next question is whether we can eligible to take input of what tax we pay to airlines along with freight. Answer is yes.
I think that's answered already.
Yeah, already answered. Is GST applicable for air cargo freight services? I think the question was addressed before I started speaking, so I'll skip that question.
Right.
We are a freight. Avinash has asked this question. We are a freight forwarder and billing to our customer for air freight, sea freight under other territory. As per our customer, they cannot claim GST input because the location mentioned as other territory. Can our customer claim ITC on freight charges? See, the conditions for input tax credit availment is governed by section 16(2). Nothing else. 16(2) says you must possess an invoice. Yes. You must receive the service. Yes. GSTR 1 must be filed by the supplier. Yes. GSTR 3B must be filed by the supplier. Yes. Supplier must have paid the tax. Yes. Portal should not say that you are not eligible. That is a 2B. These are the only conditions in 16(2). Anything other than this is alien. Therefore, this interpretation that other territory might trigger an issue is probably floating from that FAQ which came from the institute, and therefore you should take the bull by the horns and address this issue in case it becomes a bigger issue later on. Because if your exporter says I can't claim ITC, he won't pay you the GST push, and you're going to get stuck on that. So very important that we tackle this issue upfront. Primary representation is still the exemption. Secondary one is this.
We would be addressing those. I think it's good to make note of these issues, Mr. Govil, and we should be addressing these in our representation. Besides, of course, asking for the exemption to be restored of a zero rated, but we should ensure that these questions perhaps make up our representation. Thank you. Please, sir, go ahead.
And a question from Amina Khan: with the change in taxability of export freight, what if variable is issued before September 30th for shipment takeoff before October 1st, but CSR issued after October 1st? Should airline charge GST? CSR is another document, but invoice is a critical document because section 14 deals with invoice and payment. These are the two words that are used. So I've already covered a slide which explains as to what are the tax consequences if invoice is issued in September, invoice is issued in October. So that should have adequately answered this question.
Thank you.
What is the notification number where it's clarified GST rate on air freight and sea freight? See, what happened was, it had a 3922 sunset clause. Every year it was from 18, that number was there. They'll issue a notification saying that read 3918 as 3919, read 3919 as 20, read 3920 as 21. This 22, after 22 they should have said 23, they have not said that. So the hope is that even now a notification need not be retrospective, but they can just substitute that date as 3923 or 24, then that should address it.
Correct.
Can we have a copy of this PPT? Please send me a mail. I will share it, or I will send it to ACAAI headquarters. They can share it with you.
To everyone.
Sorry?
Sir, we will send it to everyone with your permission who have sent in their email IDs.
Okay. Can we charge GST to overseas agents? Nothing wrong, provided they pay you.
Yeah.
Import of service and net off, can you please explain again? This is a very good question. So I've sold for 120, I bought for $100, I've sold for $120 to my overseas counterpart. Now, there is some kind of arrangement whereby the profit is shared, supposedly shared, because since I make $20 profit on this transaction, I'm expected to give him $10. So what he does is, he's supposed to give me 120, I'm supposed to make payment of 10. But that's a waste of time, banking charges, back and forth, all these things. So accounting wise, there's nothing wrong in it off. I owe you 25 crores, you owe me 6 crores. So we'll adjust and give you 19 crores. So something like that, money flows. RBI permits it, but certain norms are there in the circular. You have to follow them. But what happens is that you receive 120, but you recognize that you paid $10 to the foreign party. And that $10 is not towards freight, but towards profit share or a revenue share or some support service or local support service. So it is better that you treat it as an import of service and discharge GST on the transaction, IGST under reverse charge mechanism. Credit is always available. You can claim refund of that if you're an exporter, or you bill it to the exporter by adjusting it. So here also, because you're billing 120 to your customer, which is the foreign party, that is your export of service. So even if you pay $10 import of service, 18% on that, you will get that refund because 120 is your export value. That should not be a problem, except for the cash flow in the first few months. And one more question which somebody else asked me. Sir, you are talking about refund. You are talking about zero rated supply. You are saying that don't charge GST, claim ITC refund. Is it efficient? Is it fast? Does it happen seamlessly? To my knowledge, I did some inquiry with a couple of my friends who are in different export segments. They say that you get your refund, 80% of the refund almost within a month. Balance 20% is after checking certain transactions, invoices, etc. So the first segment of 80% of your refund claim happens instantaneously or in a month or so. The second segment is a bit later. Now, one more thing you have to understand. Let us say your airline has charged, you bought an airline slot for 100, he has charged 18%, you have claimed 18 rupees ITC, you are exporting for 120. Now 120, you don't pay any GST. You want that 18 rupees refund. You have to file a form, you have to upload the data, what is required, you have to give necessary declarations, and you have to reverse that 18 and make that claim. That is most important. You have to reverse your ITC and make that claim, and then that money, once it is refunded, it will come to you. If it is rejected for any reason, the law requires that the department should give you recredit of that amount. This is a practical issue. There are some cases where the department does not do recredit and matters involved in litigation. But generally, by and large, refunds happen seamlessly, and refund happened in a much better way than the earlier days of pre-GST regimes.
Thank you.
Then moving on, Sachin Ali has asked this question.
We paid to liner in India and invoice to overseas.
That is an export of service. I've already explained.
Yes, done, right.
I would like to know about GST impact on freight prior to 28/1/2018. Was it taxed or exempted before insetting? It was taxed, sir. From July 17, nearly 6 months, the industry suffered the pain of GST, they suffered through the compliance, went through rounds of representations, and in fact, after they had to convince the airlines that they have to stick to an invoice format because invoice was critical for ITC, and lot of complex transactions were finally understood by the industry. But they were going through a very tough phase, and that is why various rounds of representation resulted in the exemption being granted.
I think from July 2017 till 2018 January we were taxed. So
yes,
yeah.
In fact, prior to July 17, before the GST came itself, ACAAI took a major role and tried to convince the council and the teams that GST should not be there on air freight. But since it came, the members from the council are willing to give us a fair hearing and restore the exemption. So probably we can still make out a case.
Okay. Thank you.
What is meant by convertible foreign exchange? Convertible foreign exchange are those recognized notified currencies like your dollar, euro, yuan, etc. And if RBI permits INR under certain circumstances, that is also recognized for export of services. So you can't, because of the dollar rate going around like this, a lot of people prefer to receive it in rupees in some cases. So please be very careful. Only if RBI permits the receipt in INR, which is the Nostro account and certain other formats which they specify, then INR is accepted for export of services. Otherwise, if, for example, let us say the money hits from the foreign client and it hits Canara Bank, and before it comes to your account, Canara Bank converts and gives in rupees, you have not received in Forex. So receipt in Forex is very important. Earlier, FIRC challans used to be the document, but now there is no FIRC challans, but there are other documents which banks issue. So please ensure that your Forex receipt hits your bank account and you have proof that you have received the Forex.
Mr. Vaitheeswaran, I'll go back to the earlier question because I think perhaps that's something where I can assist as an ACAAI question. Mr. Lakshmi Narayan has asked that if the airline raises invoices, their CSR for second fortnight of September in October, and if they charge IGST since the date of invoice is October, it would be a big challenge to freight forwarders who would have already billed the shippers, customers already in September. How do we address this? I think ACAAI has already written to all the airlines. And we are ensuring, at least trying to ensure with the airlines that that due process is followed by them, sir. So that's something which ACAAI has already taken up with the airlines.
Fantastic.
Thank you. Sorry to interrupt you, sir. You can.
No worry, Keshav.
Thank you. Thank you.
What is the tax rate of air import shipment? How much we mentioned as consignor as free? The rate is 18, whether it is export by air or import by air. What is the new rule of SEZ customers for air export and sea export, whether they have to get any new exemption? See, if you're an SEZ, it is treated as if it's a foreign country. So just like your foreign freight forwarder counterpart or an importer of consignment, when you treat it as an export of service, for an SEZ, you can treat it as a zero rated supply. In your invoice, you must give the declaration saying that I'm supplying to SEZ for their authorized operations, and hence either LUT or otherwise you have to implement there for SEZ. So the same logic for a foreign party will apply to an SEZ, but you have to ensure that the declaration is properly mentioned. The September-October billing I've already addressed in my presentation. Since the presentation will be shared, you can go back to those slides and check on it.
Absolutely. Absolutely.
If you have any doubts, please mail it to headquarters. They can share it with you. Jump something. Do I have to raise invoice separately for air ocean freight? Now, this is another interesting question. Apart from your freight, you have other charges. You have your documentation charges, you have your processing charges, your paperwork charges, your local charges, etc. Currently, all the freight forwarders almost have a uniform pattern of claiming exemption for freight and charging CGST, SGST on that, assuming both parties are in Mumbai. Now, this is going to be a problem because the freight attracts IGST. The charges will attract CGST, SGST. So we may have to live with the regime of two invoices for both the supplies, because the CGST, SGST, and IGST in one invoice is going to be very, very tricky because it's an e-invoice. You cannot have an interstate supply and an intrastate supply on the same transaction. Or you may have to negotiate a full rate for everything and charge IGST flat on that. There are practical solutions which are always available. We can discuss that offline.
Yeah, got an order from Dubai forwarder to ship the material from India to Nigeria. Should I charge GST?
Come again?
It says got an order from Dubai forwarder to ship the material from India to Nigeria. Should I charge IGST? I think this is third country exports. What is being
addressed already? Yeah. Profit share, I've already said yes, it is taxable. Profit share, the reverse, where you receive the profit. First example I gave you, you pay $10. Second example, let us say you receive a profit share from the foreign party. It is nothing but support services, export of service. So ensure that you raise an invoice for the profit share, call it export of services, go through the LUT, you have no problem.
So one question I
show it on the same invoice, profit share we deduct from the same invoice. Is it okay?
No, given the fact that you need an invoice for an export of service, it is better that for profit share, you raise an invoice. Adjustment is okay. Once you raise an invoice and it is adjusted, that is okay. That is only accounting. But invoice must be raised.
Vaidya sir, I think we missed out one, which is what about GST on ex-works charges when billed to overseas parties?
See, ex-work charges when billed to overseas party, there has been some kind of storm within members on the tax treatment for this right from beginning. There is a school of freight forwarders who believe that the ex-works charges billed on the overseas party is nothing but incidental to freight, and therefore freight is exempted. This is also exempted. That is one set of people. Other set of people who say that I don't want to take such a big risk. Freight I will exempt it. This one I will charge GST. The third set of people would take a position that whatever ex-work, etc., I'm not handling the goods. I'm only supporting services, and therefore it will qualify as an export of service. I would sail with the third slot and the first slot. It is possible to identify it as incidental to the main principal supply of freight and give the same tax treatment of 18% now and the exemption in the past, or have a distinct arrangement where you say that I provide support services for all your ex-work activities. For the support service, I would raise an export of service invoice and take a zero-rated supply position. That would be my view as far as the first and third option is concerned. Second option, I have not advised.
Thank you.
Yeah. Shipping line has raised single invoice for origin charges with CGST and SGST and freight with IGST, whereas there's only place for invoice. How do you book such a purchase value with mix of SGST and IGST? This is, I tell you, this is going to be the biggest challenge in business, because this other territory and the ITC and the CGST, SGST coming in would become an issue. As I said, there is only one way to look at it is the shipping line might say, I made two supplies. My first supply is a freight supply on which I charge IGST. My second supply is a local supply for which I charge CGST, SGST. I'm putting your GST number. All the three GSTs are coming in your 2A. What is your problem? I think that is a fair answer, because you have received invoices for two supplies. All taxes have been charged. Returns have been filed. The amount is shown in your return. So what is important is we scrutinize the GSTR 2A meticulously from now on. We have to ensure that whatever is being charged is shown in the 2A, because if that is missing, then your entire ITC collapses, because only what is there in 2A can come in 2B, and 2B is your main thing for you to take credit. So it is important that we scrutinize the 2A going forward.
Sir, if I may just ask one small thing on this.
Yes, Vikram.
That, sir, when we are receiving billing from courier companies at this point of time, and they are marking it as other territory, that IGST is shown in our 2A and 2B. It is coming properly.
Oh, great.
So there is not a problem there, but the only thing is that they are charging under SSC 9968. They are not charging under 9965.
Okay.
What I want to know is that when we charge IGST on 9965, will it reflect properly in 2A, or will it go into the column of that inadmissible input?
No, the SAC code does not matter. The SAC code matters, but SAC code does not matter in denying the credit. The credit has got nothing to do with the SAC code. But tell me, 9968 is it? What are they using as 9968?
Courier services.
Huh?
Courier services.
Oh, courier services. Okay.
So courier services, they have an IGST because the place of supply is outside India.
Agreed.
They are billing us, and we are getting input credit on that, with other territory being shown as 2A and 2B.
Nothing to worry.
So there is no problem there. The other thing what I want to know is that there might be some cases where on some invoices we issue an LUT, we issue an LUT, and on others we issue on IGST paid basis, depending on the kind of input that we are getting back to back against it. Now, will that be a problem when we are taking our IGST paid refunds, not LUT refunds, only IGST paid refunds?
See, practically, I'll tell you what most companies do in exports is that you can make a refund application for a month. So if you're going, let us say December month, you're asking for refund, and you've gone for the zero rated supply route of refund, then you cannot mix the IGST paid in December. But the next month, January, you can make your exports with IGST. I know that this may not be a very satisfactory answer given your business requirements of Wednesday with IGST, Thursday with zero rated supply. But the refund application which you structure, it is only one application that you make for the month. And in that month, you're supposed to list out these transactions. And the column itself will say with payment of IGST, without payment of IGST. So you're stuck in terms of forms. So maybe you can also represent this point to see how we can work out on this.
Yeah, because sir, what is happening is that in those two columns, suppose we have a 30 lakh export of service, out of which 15 lakhs is done under LUT, which is 0. And 15 lakhs is done at 18%, which will give a value of X amount. We apply for a refund through RFT 01 for the X amount, which we have taken as IGST paid service. Will that be a problem? Because the total export of service will show as 30 lakhs, but the claim that we are doing for that month is only for 15 lakhs. That could be a situation because you might not have received payments for something. You might not have received billing for inputs for that month also. How are they going to correlate it? So I feel that, we should all go in for IGST paid to get clarity. Otherwise, how are you going to correlate the LUT for the input credit for every every invoice when you are claiming for the refund.
I agree with Vikram that if you have a mix of transactions of billing with IGST and billing with zero rated supply, then a better choice would be to go for payment of IGST on refund, because at least you will use off your ITC. See what happens if you pay IGST, you'll be able to use off your ITC and then still make a claim for the refund. So
Yes.
it may not hit you so much in terms of cash flows.
Yes, exactly. Thank you. Thank you very much.
Sir, before we proceed, Afzal Bhai, I think, has raised his hand. Afzal Bhai, would you like to say something, sir?
Sir, I just want to know if we are having a multimodal transport work going on. That means from Navasheva, we are sending it by sea to either Singapore or any other country, and from there it is going by air. We are issuing multimodal document. It will show all the modes of transport. In that case, we will be charged by shipping line 5%. We will be charging the customer 5% only of the sea part, or we have to charge what type of percentage we have to charge to the customer?
But for the multimodal, did you not get a 12% sometime in between?
Yes.
I think so, yeah, there is a 12% for that multimodal.
Yeah,
But
so-
the shipping line will be charging us to 5%, right?
See,
Because
this,
they will be only operating a sea freight. They will be only issuing a BL from one port to another port.
Afzal Bhai, you know what happened? When the multimodal transport rate came at 12%, the industry was a bit shocked because they said, look, you have a basic exemption for export freight, air freight and sea freight. But multimodal also involves the sea freight and air freight. And therefore, are you trying to tax that? Then the government bent forward and said that he'll amend the place of supply provisions. And that's how the destination outside India became the place of supply. So now what has happened is that since place of supply is outside India, you have the IGST impact, but the air freight is at 18, sea is at 5, multimodal segment is at 12. So you will have to see how your billing is. We each are distinct supplies. You can probably identify them as separate supplies.
We can identify the separate supply, but we are issuing one MTD document and we will be billing as per one MTD only. In that case, we have to charge 12%. That is what I think you clearly say.
I will park that question. If in fact you can send me an email on this, I will give a separate answer on this as to what should be adopted. I don't want to give a straightforward answer and say it is 12. Let me examine whether the 5 can still apply.
Okay, sir. Thank you.
Thank you.
Krishna.
Please go ahead, sir.
Yeah, very basically, you just said on the export of services, if we raise invoice to foreign agent. Now, what happens is if there is an agent, with whom I'm working in the United States, he owes me $400,000 and I owe him $200,000 for the import of goods, which I'm importing. Now, he's only taking the payment of $200,000, instead of $400,000. Now, you are saying that they can deduct his profit share, then only you can claim. But here, he's not paying me what I was supposed to pay him. So what will happen to this type of cases?
I'll tell you what will happen. See, you're supposed to receive $400,000. Yes. You're supposed to make payment of $200,000. He does a simple netting off and gives you $200,000, which will hit your bank account.
Yeah.
Now, your foreign remittance documents or whatever bank statement will show $200,000 receipt.
Yes.
You will claim export of services $400,000. Now your GST audit will flag this. This is a standard flagging point. They will say that you have not received forex and therefore only this much of benefit I can give you. I cannot give you this benefit. Then we'll have to give that RBI circular and then say netting off is permitted. This is a two-way traffic. Instead of doing that, it has been adjusted and therefore this is deemed to have been received. And some of you might remember the old battle which we used to fight. When you receive foreign exchange for insurance commission. That dispute used to be there. I used to fight that battle in various courts where we relied upon a Supreme Court judgment called JB Boda. In JB Boda, what happened was a person had to receive, had to make a payment of $100 to the foreign party. He must receive $5 as commission. $5 commission was exempted under income tax law. Now, what he did was, this doesn't make sense for me to make $100 payment and receive 5. I will dispatch 95. So he sent 95, retaining his money. Income tax department said that you have not received convertible foreign exchange. Matter went to Supreme Court and Supreme Court gave a beautiful judgment saying that this is madness. You are insisting on two-way traffic unnecessarily. The adjustment has the same effect and therefore you should get the benefit. But this is a well-known case law. But this well-known case law will have to be given to your audit department. Audit department is going to say that is income tax case law, not GST case law. And therefore, there will be some limitation. on this particular point. So try to see if you can go back to old days of you give me money, I give you money, even though transaction charges multiply, if you want to avoid litigation.
Okay. Thank you.
My God. Anyway, thank you. Yeah, please go ahead.
Sir, one more before I, sir, you see this, the same thing what I'm asking regarding the multimodal. But now, as per what you said, if the master is prepared and house is collect, we cannot charge our foreign agent the GST. Now, in this case, also in multimodal, also we are consigning the master bill of lading to our overseas agent. In that case, also, I think the same rule applies of not charging.
Same rule should apply. Same export of service rule should apply.
Okay, thank you.
Sunil, you have some questions, Sunil?
Yeah, Mr. Vaitheeswaran, I have a question here. Membership of ACAAI and agents all over India are looking upon for guidance from ACAAI on one particular recommended process. Like you said, there are two processes, which both are correct. That is claiming of ITC. And the second process is paying of IGST and then filing a refund. We would like to have a pan-India similar practice to be followed. We can recommend so that later on, if things go to, at a higher level, then we say all of us are on the same platform. But this sort of a digression from half of people doing the ITC credit and half of set of people doing IGST paid and then refund claim. What do you recommend that our industry should do and would be in the right line of law? And so would I like to recommend this membership?
See, what will happen in the first few months is at least the October billing and the November billing. You may not have that much of ITC available because the tax has come for the first time, and therefore when you bill your foreign counterpart, you would rather prefer to do a zero rated supply under LUT because you don't have the money to pay the GST because that much of ITC is not available. But in a month or so, the airline bills will start trickling in, the shipping line bills will start coming in, and the IGST will come to your 2A, 2B, etc. You will have a significant ITC available. So probably most businesses will look at the ITC accumulation and then start using the payment route rather than the refund route after a point. It will become an automatic solution which happens from business angle because the payment of IGST and getting back refund is slightly faster than the input tax refund. There is only one caution I would point out here. Because a lot of people are preferring the payment option, the IGST Act was amended saying that the payment option and refund option will not be available to all and will be available only to class of exporters to be specified. But luckily, that amendment is yet to be notified. It happened about a year and a half ago, but the amendment is section 16 has been amended in the IGST Act. It is yet to be notified. But it's just a Damocles sword. Suppose they notify and say only exporter of ready-made garments, exporter of granites, exporter of so-and-so can claim, then we may be forced to fall in the ITC refund exercise. So we just have to watch that space. Till then it is available.
Thank you.
Thank you, sir. Sir, I think there are a few questions, but I just quickly ran through them. Most of them, sir, you kind of answered one way or the other. But in the interest of time, if I could request the participants to maybe write into ACAAI with these questions, and we could take them up separately. Unless you would like to take them up, I'm okay. But I thought
most of them are covered in my PPT, and if you're going to share the PPT, it will answer most of the questions.
I that's what I'm seeing. I'm scrolling through most, and I can see that some are repetitive, some have been answered, and some may be fresh, but not have been answered. So I would request those participants of whose questions are not answered to perhaps write into ACAAI.
I will take that question from SR Cargo. It's important. If you have crossed 10 crores, e-invoice is mandatory. Your own software system doesn't matter. You still have to go to a separate portal and generate IRN.
I think this is going to be the situation with most of us. So this artificial fund flow, which will now go through our books, is going to be detrimental to us because these amounts now are going to be so huge, which will be going through our books. We'll all be going through 10 crores and above, even those who are not. But anyway, I think if we can, if there's anything else,
I just want to have a quick word.
Yeah, JK, go ahead.
Vaithi sir, you are aware that there is something called CAS billing where sale on all the airlines is today given to us on a single invoice. How do you look at it from the tax angle and input credit angle? Would that work?
But in July 17, when the GST came for the first time, I think airlines revised the system, no?
No, they did not. Keshav, correct me. The cost invoice was not changed.
But does it capture all the invoice details which is required under GST law?
So between now and then, there have been changes, significant changes.
No, but even airline has to generate a e-invoice. I don't think they can do anything.
No, this is done by an outsourced agency. This is the invoice is not raised on any airline's name. The airlines will not raise an invoice, Vaithi said. CAS raises an invoice.
But CAS will refer to British Airways or Lufthansa in their document.
But their GST numbers will not reflect.
Oh, then you're in trouble.
That is exactly the point I wish to highlight. This is something that we need to look at.
I think they reflect, JK. The airline GST numbers reflect.
The GST numbers reflect, absolutely.
I've got my team sitting.
No, in one invoice, you have six GST numbers. What I'm trying to say is that.
No, every invoice has a different number.
Every
airline invoice has a different number.
They are sending different invoice of every airline. They are not sending one consolidated invoice. They are sending different invoice of different station differently.
Yeah, and all have different GST numbers and different TDS rates. Everything is different.
The TDS, there's no issue on the TDS. The TDS, there's no issue. But whether this CAS invoice being raised,
Sir,
would it qualify as a regular invoice, tax invoice?
No,
Sir, there is no one invoice.
No, if going by what Keshav and Vikram are saying, if the CAS invoice refers to one invoice, one airline, one station, their GST number, your GST number,
yes,
and all other value tax details, it is fine.
Yes, it does. So if there are 4 airlines that you're dealing with, there are 4 invoice numbers, there are 4 GST numbers on it. The only thing that you have to do consolidated is make a payment which is single.
That is okay.
Yeah, JK, I've got my team sitting with me and they're saying it seems to be okay. As a matter of fact, the CAS portal has put up a new notification. So maybe we need to look at it as members.
Okay.
What is your credit period of the airline?
It's 30 days from the cycle, sir. That is twice a month.
First to 15th on the next.
And generally, what is the credit period with sub-agents?
No time limit.
Wow.
Payable when able.
Now, why I ask this question is, you have a 180-day time bomb sitting. So if you want your ITC to be intact, you must pay your sub-agent also within 180 days.
Yeah, maybe it will discipline the market. Let's see.
Yeah.
Anyway.
Keshav, I want you to, Mr. Shivaselam has raised the, hand. I think we should ask him. He's raising his hand.
Is he there, Mr. Shivaselam?
Yeah, I'm there. I just heard Mr. Vaitheeswaran with great interest and also appreciated a lot of his understanding. My point is actually take off from what was just discussed last. This whole problem about this IGST set off and ICT set off and all are being talked, because I think we are not trusting each other in the chain. And that is what is creating all this, because we say that the other fellow will not settle it, so I'm going to lose. Is it possible to create this system within ACAAI itself? Now, all what you require is a blockchain system. And you can actually file, the system, the portal, somebody like Mr. Vaitheeswaran will be able to file it for everybody every month. Because all what happens is, if it's entry for you, if it's a credit for you, it's a debit for the other fellow. And that at the end of, at the time when it should be filed. Yes, I agree with you. One of the problems which he said was trying to use tax money for, or rather, which is actually public money for basically a matter of self-discipline. But I do understand from my experience that most of the people who are members of institutions like ACAAI actually don't indulge in such practices. It's only those who are outside to make trying to cut corners who actually have this problem. So if I think we are able to get into a common platform and maybe try to create a blockchain system, we should be quickly off the blocks. And afterwards, it should not matter whether it is 5% or 18%, as far as one of the persons who asked a question really mentioned, that if I'm able to file it, I can actually claim everything within a month. I would want Mr. Vaitheeswaran's comments on how we can structure this and whether it is possible to structure this on an industry-wide basis. Something like ACAAI can own it. The reason being, if ACAAI owns this platform, everybody will plug into it, whether it is income tax, whether it is the tax guys, or whether it is the airline guys. Everybody will plug into it, and that will make things easier for people, for freight forwarders and customs brokers who are actually the persons organizing the trade. And if they are facilitated through a platform, I think somebody like you, or a combination working with you, we should be in business. That's all what I wanted to say. I wanted to have your comments on this.
Mr. Srisalam, thank you. A nice meeting you in this forum. I've heard a lot about you. Number one is that, yes, blockchain works wonders. And in this business of logistics, where you have warehousing segment, you have port segment, you have airport segment, you have different players in the chain, which involves a supply chain of about 7 to 10 people. Forget the air freight and export freight. There are so many other aspects to this entire thing before the consumer leaves the country. And the blockchain will serve as a big solution. Some states have already implemented blockchain in registration, which is also working wonders. The PATA and the registrations are all well tallied through blockchain. But it requires a lot of investment and acceptance. So it remains to be seen how far it gains, because the same document gets authenticated through the blockchain system very effectively. But coming to the vendor verification and ITC part of it, you're right. The ACAAI members are at very high levels of compliance, and the frauds that are normally associated with ITC do not happen in this segment at all, because all of them are equally in the same business, buying and selling freight rates, and therefore the compliance levels are quite high. So I take your point that it's just a matter of time it can settle down. But the concerns in ITC flows from twofold. One, because of the peculiar aspect of the other territory and IGST and some of the FAQs floating from the Institute of Chartered Accounts, which says that credit can be restricted. And the second issue is in the context of the fact that a lot of people are new in the chain, and therefore it would take some level of compliance to ensure that they file their returns and pay the taxes. So there are softwares available in the market, but nothing like if ACAAI chooses to develop its own solution for vendor verification. I think ACAAI already has an IT solution for some of the business patterns. ACAAI itself commissioned a software, if I remember, some years back. So maybe in future, if the demand arises, I'm sure the association will step in.
Sir,
I think our president has raised his hand.
Last question from me. Sir, you said that we can claim back the freight as ITC provided because it's a service given by them. Now, that means the service charges can be claimed back as ITC, but not the freight charges. But they are specifically mentioning freight. They are not mentioning service charge in the CSR invoice.
Afzal bhai, freight is the service.
I understand that, but the wording that comes on the invoice is freight, not service.
Don't worry, because the rate of 5% comes from 11/2017, which is a notification only for services. 1/17 is for goods, so don't worry.
Okay, thank you.
Thank you, sir.
Can I have just one more last question?
Let's do the last, sir. Thank you.
Yeah, okay. Supposing, we get a lot of requests now for the shipments originating from Germany going to, say, Bangladesh, but the shipper, the guy is giving instruction in India, and we are billing to him, locally. Now, do we have to charge 18% on that?
Yes, because even though the destination is outside India, your billing is to the Indian exporter.
So the GST has to be charged.
Correct. If it has to be an export, the recipient of your service, that means whom you bill to, must be a foreign party.
No, it's here, in this case, the origin and the destination, they both are not in India.
No, but whom do you bill?
It's originating in Germany, going to, say, Bangladesh or somewhere.
Okay. So I would request ACAAI to flag this question to me. I have an interesting answer I will share with that.
Okay.
I think somebody else has also put it up, Vipin, on the
You
chat.
send both those questions to me. I'll give you my views on that.
Like I said, is what they call the third country export, something like this.
Yes.
So if we could make note of this, Mr. Govil, I think somebody is noting the questions, right? I think we have Mr. Nigam on the line, so probably somebody could.
We have noted it down. We have noted it down. Not to worry.
With that, I must end this session because we've gone a little beyond our time, and I must thank Mr. Vaitheeswaran for this extremely illustrative presentation, which will be shared. I think a lot of people have asked for this presentation, so with the permission of the President of ACAAI, sir, I'm presuming this will be shared, right, sir?
Yeah, definitely it will be shared. And sir, thank you very much for sparing your time.
Right.
And it is a very not only interesting, very knowledgeable session also for our members. But be ready that there will be a bombardment of questions coming to you from by mail, which I think whenever you get free time, you will be definitely giving us the reply. And and whenever we will have more questions or more requirement by our members, we will again disturb you to have one more Zoom call anytime.
Thank you. And my relation with ACAAI goes many years, so I have no problem.
Thank you very much, sir. Thank you very much. Keshav bhai.
I think Afzal bhai also, what we should let our members know is that ACAAI is trying its best, in fact its worst, to try and get this exemption in place again, because it's really detrimental to our business, as we know, and we'll keep our members informed as to how it progresses in days to come.
We will also inform the members that on the 17th at 11 o'clock there is